Thank you, Madam Chair. Thank you, Chair Powell, for being here. So in June of 2021 at the Green Swan Conference, you said climate change poses profound challenges for the global economy and the financial system. In October of 2021, FSOC's report on climate-related financial risk for the first time identified climate change as an emerging threat to U.S. financial stability. And in December of last year, the Fed released climate supervisory principles for large banks that said, quote, the financial impacts that result from the economic impacts of climate change and the transition to a lower carbon economy pose an emerging risk to the safety and soundness of financial institutions and the financial stability of the United States. You've made many comments today that I think are broadly consistent with that in your role, and I appreciate the comments you've made in that capacity. Can I safely conclude that in June of 2023, 6 months after that release, that the Fed's position is still that climate change presents a risk to the global economy and the financial system?
Yes. I mean, I hasten to add, though, that our role in this is an important but quite small one around bank regulation.
Understood. And I'm not asking for the role. I just want to clarify that. The reason I asked that question is because on May 11th, your colleague Christopher Waller at a speech in Spain said, quote, climate change does not pose a serious risk to the safety and soundness of large banks or the financial stability of the United States, and went on to say that the risks posed by climate change are not sufficiently unique or material to merit special treatment relative to others. Should we understand as we sit here that Mr. Waller was speaking in his personal capacity and not as a designee of the Fed, if indeed Fed policy hasn't changed since December of 22?
So I don't comment on the things that my colleagues say.
So I understand, but you understand the concern that if markets and regulators are to understand that the Fed has a consistent policy, and one of the members of the Fed is saying something that appears to be directly opposed to Fed policy from 6 months earlier, that's a concern.
Again, it's governors have always had the ability, and Reserve Bank presidents as well, the ability to have their own views on things, and that's going to happen, and that's probably a good thing that we have a diversity of perspectives. I think there may be less in that difference than you suggest. I mean, what I'm saying is that banks, to the extent we have a role, it is to assure that banks understand and can manage the risks that they do face from climate change.
Okay. Well, I don't want to create internal tension, but I think we're all aware that you, above anyone, is aware that your words are closely scrutinized, and we were concerned with the words of your colleagues there. Madam Chair, I'd like to introduce for the record a working paper from the European Central Bank, The Impact of Global Warming on Inflation. I don't know if you saw this report that just came out recently, but it says, among other things, that climate change poses risk to price stability by having an upward effect on inflation, both food prices and headline inflation. And what I wonder, without opining on their math, if in fact we are looking at a world where climate change, per the European Central Bank, is going to increase inflation, and we were to find ourselves in that world going forward, would the Fed or other central regulators say we have tools to address this, or are we going to say, well, that's non-core inflation, what are we going to do in hindsight? Because it feels to me like we've got a major bank regulator saying climate change is running the risk of inflation, but I don't even know what tool you would use to address that.
You know, I can just say for now, this doesn't enter my thinking in any way that we would, in the near term, change our inflation goal because of climate change or the need to deal with it. There's a lot of thinking and research that over a long period of time, really the process of investing very large amounts of money in a green transition could drive inflation up, but that's not something we're thinking about today. We are not, during our FOMC meetings, we are not thinking about climate change as something that's relevant to the current inflation or to current monetary policy, and that is very much our focus today, is inflation today.
Yeah, and I guess what I'm struggling with is that if we agree that this is a systemic risk, if we agree that this leads to inflation, and we don't really know what role you'd have with tools, there's a concern there. Last thing I just want to end with, in April of 23, the report on SVB, one of the lessons that was noted in the Fed review said that this is an opportunity for regulators and bank managers to be more willing to adopt a precautionary perspective, and that the Fed must strengthen its supervision based on what we've learned. I'm trying to figure out with climate change, if we agree that this is a forward risk, how do we get the Fed the tools to apply a precautionary perspective?
The gentleman's time has expired. The chairman can submit